Welcome to this glorious Monday morning. There is so much going on in the market today. It's actually kind of hard to get it all in the next 10 minutes or so, which is my intention here. So what have we got? We've got a massive China rally. We've got US stocks limping along. We've got so much data coming out in the next couple of days. It's hard to wrap your head around it. And we've got something pretty big happening today. Massive, in fact, huge, and nobody really understands it. So my intention here is to explain all of that to you so you are the best informed investor, trader, whatever you may be, or aspiring investor, trader out there, so you can make better, smarter decisions and hopefully make some more money for yourself. That's always our intention here. So I'm going to share my screen with you. There we are. And actually show you the one thing that I'm incredibly excited about. For the last 18 months, we've worked on this Trends AI, and I spent the previous 10 years working on what is underlying that. And it's an indicator that actually, well, it's basically the basis of how I make money. And just to give you a little bit of a glimpse here, and this is in Trade Vision, so you can check that out if you want down below. There it is. And basically it shows you for quite a lot of stocks how buy and hold sucks, right? So this is from January 2022 to September today, and say, you're in Meta, you're up 49%, woohoo. Well, if you'd used our indicator, you'd be up 175%. Tesla, you'd be minus 44, we'd be up 81%. And you get the idea, right? So works pretty well. It is an indicator, of course. It's not financial advice. You use it, cautiously, carefully. You still need risk management and all that kind of stuff. But do play with it. It's very, very cool. I'm really enjoying it. We're having some really great success with it. It looks like this. Basically, we have our holds, our buys, our exits, and you can just kind of click through the charts and you can see, what are we doing here when it turns green? Well, you get the idea. When it turns red, I think you get the idea. And very, very useful. So you'll be seeing me use this more often on YouTube here, but you check it out. There is a 7-day trial. It's risk-free. Just test it. If you like it, you like it. If you don't, you walk away. So yeah, check that out. Tradevision.io. Very, very excited by that. We've worked so many hours on this, you wouldn't believe. So what's going on today? Well, you'd think with the Chinese stock market going absolutely ballistic, the world would be going ballistic too, but it's not. Because look at the heat map. This is pre-market. Shudder, right? Quite a lot of red. Apple is looking a bit good, but that's pretty much it, right? That's pretty much it. Everything else is pretty red. Nvidia down 2.6% here. Amazon, JP Morgan red. Big tech stocks flat. CRM flat. Tesla down 0.8%. So we're not looking at party central. And there are a bunch of reasons for that. We will walk through here in the next few minutes. Chair Powell is speaking today, the anointed one. And we should have, we have jobs data coming out. We've got earnings coming out this week. A lot of stuff going on here as well. How do you get that chart, Aruna? You literally just go to Trade Vision. It'll open up on that page once you're logged in. Otherwise, on the top right here, it says Trends AI. Do you see that? You just click on that, and then you get to this chart, and then you can scroll through. You can also just search for stuff up here. We've done this for about 2,000 tickers. And at the top right, we tell you how well we've done. So we're always transparent with that. And there are some stocks it doesn't really work very well for. If they're insanely volatile, it's quite hard to do. Or if they've gone up in a straight line, very hard to beat a straight line. So there are some examples where we just struggle to do better, but you can always see that. So obviously, use your judgment. So yeah, China stocks are up massively. The Chinese stock index is up something like 8.5%. I think they actually stopped trading because they were up too much, at least on the futures. Biggest rally since 2008. Lots of stimulus, basically. There, some commodities are rallying on the back of that because China is a massive commodity importer there. They are heading into a holiday season. I don't know if that's tomorrow or the day after for National Day. So it'll be kind of interesting to see what happens after that. But why are they rallying so much? It isn't just the stimulus. It's just, this is a Goldman's chart, I think. I think the lovely lovies at Goldman put this out. And they asked people in beginning of September, hey, what's the most crowded trade out there? What's everyone in? And yes, everybody is long the Magnificent Seven, the big tech stocks, true. But everybody was also short Chinese stocks. So those shorts have been caught with their trousers down, literally, in the town square, starkers, and they are they're struggling. So they have to buy the stocks to cover their positions, and that fuels more rally, right? So that's how a short squeeze works. Basically, you are, say you are, you shorted, I don't know, $1 million of stock. Now suddenly the stocks jump up 15%. What happens is your $1 million is no longer $1 million. It's just become $850,000. So you lost $150,000, and that might be enough for you to say, I'm out. If you're a professional trader, maybe you're going to lose a bit more, and then you're out. So what do? Well, now you're out. So you're going to take this $850,000 and you're going to buy the very stocks that are hurting you with it to get back to a zero position, which means the stock is now no longer going up 15%, it's now going up, 20%. And therefore the next investor who's also short, he's now down, 20%, and he's going to buy back, and it's just sort of a self-fulfilling a rally there, which is why short squeezes are so powerful and potentially also very dangerous. But if you look beyond Asia, the German government's putting out some pretty negative numbers. They're basically saying the economy isn't going to grow at all this year, which generally means it's shrinking, right? Governments tend to lie, at least European ones. Not particularly good outlook there for Europe, which isn't particularly glorious. That's also part of the reason stocks are down today. And then look at this here. Have you been wondering why oil isn't up? Maybe you don't think about that. That's completely okay. That makes you normal. But I've been kind of thinking, well, you got all that war in the Middle East going on, right? You've got, loads of stuff going on. The US has basically reduced its strategic oil reserve to very little. You'd be thinking, with the economy booming as the Biden government claims, we should be seeing oil going through the roof. But actually, no, they're saying it could maybe go to $60. Maybe it could go to $55. Some even saying it could go to $30 next year. What does that mean? Well, the only reason that would happen is pretty much a recession-type environment in at least big parts of the world, and therefore we have an oversupply of oil. So it makes me feel a little bit itchy around just the whole economic thing. And then here is, no, I'm not gloomy today. I'm just, you got to understand the downside so you can make money out of the upside. I think that's always really, really important here. So what's this? This is again from our lovies at Goldman. And it's basically how much is the market positioned? How stretched is positioning, right? So if you're down here, it's sort of very low. Hardly anybody owns anything. When you are up here, at that little blue line there, you are basically stretched. And then you get these crazy moments where you get really, really stretched. But right now we're at 0.7. So we are not, low is -2, stretched is +1. So we are much closer to stretched than to low. And that's something to look at, unless you think there is a real reason for some cataclysmic revolutionary bull market. It might make you think maybe we're a little bit closer to the top than we are to the bottom. So maybe it makes sense to just start taking a little bit of profits, get a little bit more cautious, put our stop losses in and all that kind of stuff, right? So that's something definitely to look at. And that's exactly what we do. And that's why, this is our trading portfolio for the year, our teaching portfolio. We are up 93% so far this year. We started with $30,000. We are right now at about $58,000 of realized gains. So if you're wondering how we do that, maybe you're dubious about how we do that, then come and join me on Wednesday and Thursday for an hour each day at 8 a.m. New York time or 1 p.m. London time, and I'll show you how we do it. Show you the rules. I'll teach you the rules. We walk through some actual trades together and everything else. FelixFriends.org/challenge is the link to sign up for that. So check that out, and I'd be super happy to see you there, and you can pummel me. But here is something that hardly anybody explains. Massive options expiration today. What does that mean? Well, it's the last day of the month, and it's also the last day of the quarter, and that's important. So last day of quarter. And on the last day of the quarter, a little organization that's called JP Morgan has a monster trade open every single quarter. It's called the JP Morgan trade or the JP Morgan collar or whatever you might call it, and sort of obscure financial press talks about it sometimes. And you can see it. If you go into Trade Vision here and you open the, hang on. Yeah. Show you. Let me show you. Here we go. You open the SPX, which is the S&P 500, and you see there at 5750, I'll zoom in for you, this massive candle. That's JP Morgan. And you see it down here as well. Right? That's also JP Morgan. So it's a massive, massive colossus of options. And what does it do? Well, it does quite a lot of things. Tends to make JP Morgan a lot of money. But essentially, it pins the market down because it's that big. It actually stops the market from moving. Now, you might think it's good for the market to move, but it's what's been underpinning the stability we've had. So what has been happening is as we go up, the market's been selling, the market makers. As we've been going down, the market makers have been buying. And that creates sort of a stable, fluffy kind of environment. It's just that safety net that's there. That goes away by the end of today. So what will we expect for the rest of the week and maybe going into October? More madness, basically. More volatility, as they politely call it in the market. So be a little careful. If you've got something that's like on the edge and you're watching it, you're thinking, should I stay in it, should I not? You should probably not stay in it. Obviously, I don't know your trades. I can't give you advice on it, but you hear what I'm saying, right? The market is likely to get a lot more crazy after today. So bear that in mind. I hope that's useful. Frederick, with Israel doing the Israel stuff, yeah, you'd think that, but oil is more about demand than about, killing Hezbollah. And no one's bombing oil installations, right? So it's not that kind of war. If you were to attack Iraq's oil installations or something, that would do it, or Iran's even. But they're just bombing bunkers somewhere, right? So it doesn't actually have very much impact. And Israel itself is not a relevant oil player. It's completely irrelevant from that perspective. A little bit more trustworthy than the nonsense the government puts out. 4 more boy band members from the Fed are on tour Thursday. Initial jobless claims. And then Friday, non-farm payroll, which is the jobs data the market looks at the most. So it's a really jam-packed week of economic data. And we're going to get to this point where we have to figure out what economic data means. It can mean one of 2 things. If you get bad data, you might get let me color code that. You might get a big Fed cut. You might get another 0.5% cut. If you get okay to good data, well, you probably get a small cut, or maybe even no cut, but probably a small cut. So it's gonna be different. Who's that going to be good for? So higher unemployment, slightly slowing economy. That's probably good for tech. It's probably good for, biotech, fintech, that whole space. Maybe even, probably that. And if you get okay data, well, that's probably good for your consumer stocks, especially your consumer durables, which is, stuff like Tesla. Or car companies who are reporting horrible numbers in Europe. Stellantis, absolute freaking disaster. It's probably also good for things like Nike and shops and the real world, right? So you kind of have to look at the nuances of the data that comes out. Now, in the perfect world, we want the data to come in here. It's not bad, but it isn't great. That's the soft landing spot that we want, right? That's sort of the sweet spot where we go, brilliant, we're still getting rate cuts, but it's still okay. Some of you have got a bit of an issue with the stream here. Peculiar. Not receiving enough stream to maintain smooth streaming. Sorry about that. That's something on YouTube's end, I'm afraid. Are we back? Terrible stream. It keeps dropping. Okay. Odd. Not a great deal I can do about that, I'm afraid. Sorry about that, guys. I shall natter on and hopefully maybe just go back a minute or so in the stream. That might fix it. That might do the trick. So yeah, seems to be something. I don't really know what's causing that, to be honest with you. Our sound keeps dropping. Not brilliant, is it? Well, keeps life interesting, doesn't it? There isn't really much we can do on that end. Once we're live, YouTube gives you absolutely bugger all features on that front. So it just says to you error. But hopefully it'll fix itself. That's kind of my hope. We'll see if that happens. If it doesn't, it doesn't. And I'm just talking to myself, which is, of course, also entirely back. Okay, we are back. Okay, it could just be, something on the Elon used all the bandwidth or something like that. So I hope this sort of made sense. We kind of want to we don't want bad data. We don't want great data, economic data. We want something in between so that we kind of still get the Fed cuts, but we don't destroy the economy. That's basically what we want. Okay, the error seems to have disappeared. Let's persist, says William. Absolutely. We shall always persevere, my friends. So that's kind of what we're looking at here. So if you look at pre-market, doesn't look particularly wonderful. NVIDIA here down 2.5 percentage points. So if I type that into our little Trends AI indicator here, which, by the way that works is it's not AI making up the whole thing. So it was originally just my rules codified, and then we've taught AI how to interpret them for each stock, which is kind of cool. So AI can do more than you and I could do. So what's the Philippe is praying for the Lebanese and the Palestinian people. Just pray for all people, my friend. All people are the same. It doesn't really matter what their passport is or whatever. People are all people. We all have the same problems ultimately. So I wouldn't really pick one side or the other there. War is always bad, except if you're a defense contractor. So that's kind of the NVIDIA highs here, right? You can see that we're just forming that high. It was lower than that one. This one was lower. That one was lower. This one looks lower again. So it's not really brilliant, is it? Now, there is a little bit of a silver lining here. If you just connect these lows, but you are dangerously close to breaking down through that uptrend. And we don't want that to happen. As we're trading right now here at 118, that is actually happening. Okay, my lines have gotten mixed up, but you get the, I hope you get the idea. Let me zoom in a bit more on that for you. So we don't want to break, where we are right now at 118, we've broken below the uptrend. And that's, it's a little dangereux, as they say in France. There is some support here, and you can literally just see that, just draw that across here. And you can see we have that low there, this one, that one, and that one. So there's a fairly good chance we bounce off the sort of 118. But watch that space, because not much fun holding backs. Yeah, we're still getting some errors here. Jump a minute back in the video for better YouTube quality. I'm going to write that in the chat. You probably see that too late, won't you? Because you won't see that in the chat if you're jumping back a minute. But there we are. So we can look at a few other things as well here pre-market. Some of our good old favorites. Tesla is Palantir here is slightly below the high, slightly below that 36.90 dip there, but still looking quite good. Trading at 36.50 right now, only down 0.8%. We look at SoFi. Vincent, why the craziness in the market? Would you say people learning should take paper trade more? You should always paper trade more. And just don't trade September, and don't trade October before an election. Also, just don't do it. I mean, I'm doing very little. I don't know why you want to do more, to be honest with you. So far, yeah, 788, not a big move there. Let's have a look at the PayPal party, see how that's going. And yeah, also dipping a little bit below here, right? So 2 points don't make a trend line, but you kind of get a little bit the idea here. We don't want to break through that, even though it isn't really a trend line yet. So we're doing that right now. We kind of want to hold on to that. So it's looking okay. We just don't want to drop below the 77, I'd say. Anything else? Any other stocks you want me to look at, my friends? Let me know. Neo, yeah, that's obviously just the whole market. It's just like a total squeeze up here. So it's a vertical chart for much of that's Chinese, but perspective, right? That's a little bit sobering when you look back 2 years. But yeah, it looks quite beautiful here. It's broken out. We're back to where? January levels, something like that, 758. Felipe, you're not doing anything this month. Use a paper trading account, go nuts. Occasionally, I might do a small something, but yeah, I'll do very little. Is Webull paper trading available in the UK? I believe so, Dean. Yes, I believe it is. Mew. Okay, we can have a look at Mew. There she is. What do you see there? You see this? That's basically your resistance, right? That high, this elongated high, and this high, even though it's slightly higher, is not significantly higher. So the question is now, have we formed 3 highs here in a row, which isn't particularly wonderful, and therefore are we gonna go all the way back down here? We don't have to, but yeah, it's not looking marveloso. How's Winston? Oh, Winston's glorious. A bit hot. He's a bit irritated that it's still hot. It's like 34 degrees Celsius here today or something, which is, I don't know, what's that in Fahrenheit? 34 C in F. 93 degrees Fahrenheit here today. It's really hot if you're wearing a fur coat. So he's a bit like, hey, this is meant to be cooler in September. I was lied to. So he's a little bit annoyed by that, but hopefully it'll cool down soon. Drew Road Capital Caterpillar only 4 times, so we got it on the screen here. Yeah, that's a beautiful rally, isn't it? That's a really, really nice rally. And I would literally just, if I were in that trade, which I'm not, I would literally just connect here the lows a little bit generously. A trading account, yeah, that's free, right? There is a free guest account, which is super, super useful. And yeah, I don't know what's going on with the YouTube thing here today. I'm sure YouTube will figure that out at some point. How do you get to the line chart? Click on Trends AI in the top right of TradeVision, my friend. So you go to tradevision.io, links down below in the description as well, TradeVision. I'll put it in the chat here as well. Grab yourself a trial account. It's free completely for a week, and then if you don't like it, you cancel it, 0 risk, and then you can click on Trends AI up here, and it gives you that, and it gives you our buys and holds and so on, and here quite nicely. Obviously, a lot of Chinese stocks will be in that list. A lot of stuff here looking quite nice on the buy side. You get every chart for $20. Yeah, I think it's 19 a month, or it's 16 if you sub a month for the year. And yeah, you get access to every chart. There are like look at 2,000 tickers or something. It tells you in the top right whether we're beating the market or not, and then we have email alerts that come out every day as well, which give you an idea of what's going up and down, and what we like and what we don't. And then also we get our exits. But you still need to have a system. You still need to have some rules if you really want to optimize indicators. Come and learn mine on Wednesday and Thursday at felixprehn.org/challenge for free. That's also here. The link's there, felixprehn.org/challenge. That's completely free as well. So check that out. $20 per chart. That would be something, wouldn't it, Carl? No, our intention here is just to make quality data available to everybody. So the intention is for this not to be, for this to be affordable at a reasonable level. This is unwatchable. All right, sorry about that, guys. We seem to have some weird tech issues. I don't really know why, or whether that's affecting only some of you and not all of you. Absolutely no idea. Sorry about that, guys. Apologies for the tech side. But yeah, market's looking a little dodgy today. Go to the beginning of the video if you want to find out why we walked through it. And check out Trade Vision. I think you'll have a lot of fun with our indicator here. We certainly are. And hopefully it'll help you make a lot of money as well. Like for Tesla, for example, here, look at that. Our trading is done like, 81% up. Tesla's done 44% down. So we are in that Tesla trade here right now, which is signaled there. So we'll see what happens there. But I appreciate you watching. Apologies for the weird tech issues we seem to be having here. Downgrade the video quality, says Felipe. Yeah, it's something weird. I'm getting errors as well. So it isn't just you. Something peculiar going on here. Might be a YouTube thing or something. So check out Trade Vision. Links down below. I thank you for watching. I thank you for tuning in. And I'll see you tomorrow in full HD.